We have a great deal to do today, and I'm going to try to talk fast, but I don't want to leave you behind. I want to lay a foundation that is important for you for 3 weeks in a row. 3 chapters that we cover all depend on the information this week. And now would be a good time for you to start catching on. Let's take a little look back and look ahead at some of the things that are the same and different. We started out first semester as a service industry in chapters 1 to 4 because it was the simplest. We were trying to get you well grounded in accounting, some of the basic terms, before we added too many complications. In chapter 5, we put service industries aside and became a merchandising concern and have been concerned with merchandising transactions from that point until this. And we're about to make another of those big changes. We are becoming a manufacturing firm. Thus, I wanted you to be a little familiar with what was going on today. We'll have more to say about how you were expected to prepare, but to give me something to build upon. And it is manufacturing that will command our attention the rest of the semester. We're going to be producing a product. Merchandising firms buy goods and sell them just like they acquired them. Manufacturing firms buy things, turn them into something else. The goods they sell are distinctly different from the goods they acquire. And it's our job to determine the cost of those goods so that we can make good decisions based upon that. We're also making a major change in our approach. Up until this point, what we've done could best be described as financial accounting. Even though it's been useful to us, its primary motivation has been to outsiders. We want to tell creditors and bankers and stockholders and other people that would be interested in knowing about our company these things. It's called financial accounting. These are the rules for financial accounting. And in a way, we're turning our backs on that. We're still responsible for reporting to outsiders, but we're turning a little more inward. We're interested in gathering information and supplying it for management. And every step that we take, we get deeper into this managerial accounting. Now, some of you are going to like this more than anything we've ever done. Some of you are going to find that you have an expertise for this that is unlike anything you've ever demonstrated. Did you hear me? We weren't particularly pleased with Exam 1's results, nor Exam 2's results. And what I'm trying to do with words right this minute is wipe the slate clean and not base it on past experience. We don't have to know about bonds or cash flows or a whole lot of other things right this minute. We are starting over with some brand new topics that you could have a great attitude about, invest some time in, and do a great job. It's manufacturing that I'm attempting to introduce you to today. And in the next week, and the next chapter, and the next week, and the next chapter, I'm going to be looking back at this talk and these things that you do this week saying, remember when we did so-and-so? Remember when we did so-and-so? There are a lot of threads that run throughout this that are the same. These 3 chapters are a lot alike. And they start today with the foundation that we're trying to lay in the way we're going to talk and the way we're going to use those account titles and concepts. We need to know about it. We need to know about this technique, job order, as opposed to the other one we're going to talk about next week, process cost accounting. What's different about job order cost accounting? I want to talk about it at the beginning of today and then at the beginning of next week to try to help you sort out which manufacturing firm is going to use which, job order or process cost accounting. One of the big things we need to do this week is to know about the flow of costs through the accounts. I'm going to try to illustrate that to you today. It's all about the journal entries we make and the account titles that we use. What is it that happens to this product as it moves through the assembly line? What costs are we incurring? How are we going to record those costs? It's the same in all 3 of these chapters. If you wake up 3 chapters from now and still don't know the flow of costs through the accounts, shame on you. because you were supposed to learn it this week. We have something else to learn next week. Next week will make a whole lot more sense to you if you learn this thing this week. Have I made myself clear?
Yes.
Good. And then we ought to be concerned that manufacturing overhead's a little different from the other things. You need to know how it works. You need to demonstrate that in your homework and in the things we do in class. But you ought to be curious enough to want to go beyond that and ask the why. Why is manufacturing overhead done this way when all the other things are not done that way? I might get to it today. If I talk fast enough, I might not. You deserve to hear it. I hope that you can hear it at some point. Let's talk about how I attempted to get you prepared for today. I hope you read the syllabus. I hope you're aware that there's a homework problem due today. I'm hoping that you glanced at, got into a bit of chapter 19 to be familiar with the topic, so I wouldn't be starting from scratch today. Chapter 19 is a great introduction and has a lot of new terminology in it that you'll want to be familiar with. Chapter 19 is so good that you could turn back and look at it and reread it and benefit from it in any of these 3 chapters that we're doing right here together. These 3 chapters all are based on information in chapter 19. There are some good questions recommended in the syllabus that you could answer. There's some good exercises recommended in the syllabus that you could prepare. There's a homework problem today. Due today. I'm curious to know who's got it ready to turn in right this minute. Hands above your head. Good. Who doesn't? I'm not looking at faces. I'm looking at hands above your head. If you'll put them above your head. You just dodged a bullet. I'm going to collect the homework problem. We are going to collect the homework problem in first discussion this week on Tuesday and Wednesday. You got a little breather there. But thank you to the rest of you who did it and came to class a teeny bit more prepared because you experienced that. Let's talk about, say goodbye to chapter 19 and say hello to chapter 20. That's it. That's the time I'm going to spend in class on chapter 19. Okay? In chapters 20 and 21, get into the thick of things. Chapters 20 and 21 divert from 19. 19 assumes periodic inventory procedures. Right off, chapter 20 assumes perpetual inventory procedures. Just like we did most of the time first semester. We're using perpetual inventory procedures to account for these costs that we incur. There are 2 different systems that a manufacturing firm could use. A manufacturing firm could adopt job order cost accounting, or they could adopt process cost accounting. Job order is the subject this week. I don't mind mentioning process at the moment to help you begin to draw the contrast. I've said already and I'm saying again, next Monday I plan to tell you about job order and process, but at that point job order will be reviewed and process will be new because that's the one we'll focus on next week. The characteristics of job order are that we prepare, we accumulate information in the accounting system for customers' special orders. The jobs are different. The jobs are unique. We can identify the costs that are incurred in those jobs and can trace those costs to that particular job. Let me give a couple of examples. It's not manufacturing, but I still think I can make my point with this. Let's pretend that I need to have my brakes repaired on my automobile. And I've got mechanics all over town I could go to. I'm just choosing Pet Boys at 71st and Memorial because I thought maybe you'd seen it one time and you could relate to it, okay? Do you ladies know what a bay is in this context? Most of the gentlemen will. A bay, nod your head at me. Think of them as the garage doors, okay? Where the work's done, you raise the garage door and you put the car in there, that's a bay. So let's say this Pet Boys has 10 bays. And my car is in one of those bays having its brakes worked on. Now the car on the other side is having an oil change. And the car over here is having a tune-up. And the car over here is having something else done. And all of us are in the waiting room waiting for them to say our name and that our car's finished. When we arrive at the cash register, are we, each and every one of us, going to pay? You don't even know the question yet. Are we going to all pay the same thing to check out? No. Then how are they going to know? They're going to have a system that's going to allow those costs to be associated with that job. They're going to know what parts they use. They're going to know how long the mechanic spent. They're going to come up with some amount. I started to say some reasonable amount, but usually when we're paying for auto repairs, we don't think it's reasonable, do we? No. It probably is. No offense to auto mechanics. Do you understand my point that these are to the customer's specifications and that they can be differentiated between? We can associate those costs with that particular work. Let me give you another example, quickly. Let's pretend that my wife and I are considering some remodeling at the house. We'd like to spruce up the place a bit. And we're getting a little new carpet, and we'd like a new sofa in the living room. And so we go to every furniture store in town looking for just the right sofa for the look we're trying to achieve in the living room. And we find none. But one of those places suggests that we look through their fabrics. And we looked through the fabrics, and we took a carpet sample, we took a paint sample, and we took it home and looked at it, and we think this fabric could look nice and really accomplish what we want to. And we placed an order for a new sofa. It'll be here in 6 weeks. If we bought it off the showroom floor and took it home that day, that was probably produced and accounted for in process cost fashion. But when we got to pick out the fabric and they produced it to our specifications, that's more likely job order. Getting the idea? Yes. Now, let's talk about a print shop and a publisher. May I borrow that accounting textbook, please? I usually have one on the front row, and grab theirs. Thank you very much. May I shut your book, and can you find it again if I do? Yeah. So let's think about a print shop and a publisher. So who goes to a print shop? Maybe somebody to buy wedding invitations. They want to pick out their paper. They want to pick out the design, the type style. It's got to say the place and the time. That's going to be different from anybody else. But maybe a business person goes and orders invoices or business cards. And maybe somebody else is doing birth announcements. And maybe somebody else is ordering something else. They're all unique. Do you understand what I just said? Yes. And we can account for them in job order fashion. As opposed to textbooks of which thousands and thousands are printed just alike. We need to account for the costs that go into these books, but we're not going to produce them in an individual way like the print shop would. We're going to mass produce them. Process. I need you to have just a little glimpse about why we're going, where we're going, and we'll talk about it again next week. And we might use some of these same examples and see if they make better sense because we've talked about them. Process, next week, is for things that are produced in a continuous fashion. Lots of things being produced that are just alike and difficult or impossible to distinguish one from another. Pepsis, gallons of Brahms ice cream, cans of Campbell's soup, loaves of bread, automobiles to a certain extent, not purely, but probably automobiles, clothing. Are y'all with me or not? Yes. Most of what we consume, and I don't mean just eat, use, buy for consumption purposes, is probably produced in process cost fashion. You got a glimpse of that when I was talking about job order. But here's why. It's that continuous assembly line that rarely or never shuts down. Who experienced the virtual tour before this moment? Hands up, hi, so I don't have to see faces. Good. Who didn't? Just need to know about my target. There's a handout over on the corner of that table over there. If you didn't get a handout and you would like it and experience it, I'd appreciate it if you did. You'd probably learn more if you did. We're going to review most of those things today. It's not an absolute requirement, but maybe there's something of value there that you could still see. I need some volunteers. Tell me, from the virtual tour, 3 stages of production. I need 3 different volunteers. Start me out, Toby.
The purchase and storage of raw materials.
The first stage of production is the purchase and storage of raw materials. Name the second stage for me. What happens in the second stage?
Manufacturing.
This is where the action is, where the work's done. This is the busy one, where all the resources come together to turn a raw material into a completed product. It's manufacturing. Then the description of the third stage of production. Some hand up, please. Yes, Josh.
Storing the product and
Storing and caring for the finished product. These three stages of production have three inventory accounts which parallel them. I need 3 new volunteers to name them for me. Purchase and storage of raw materials is described with an account title called, one volunteer hand up, please. Here she is. This one's called Raw Materials. Raw Materials is the name of the account you're going to use in making your journal entries. The book says Raw Materials Inventory. If you want to write the word inventory, I'm such a stickler for the exact account title, I can't believe I'm about to give you permission to do this, but I am. If you don't want to write the word inventory after it, then we can leave that off if you want to. We're going to call it Raw Materials, and it's going to be okay with the grammar. The second stage of production was called manufacturing. What is the name of the account that takes care of that action, Nathan?
work in progress.
A lot of people say work in progress. We say work in process. I happen to like work in progress. I think work in progress is a really, 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 really good name for this. But it's not the account title that the book uses. So could we all purge that out of our mouths right this minute? It's not progress, it's process. Say it. This is work in process. It's the manufacturing stage. It's the activity stage. More things happen here than anything. I shouldn't have pushed the button. The third stage of production is storing and caring for the finished product. The inventory that parallels this is finished goods. 3 distinct inventory accounts that replace the one inventory account that you experienced from chapter 5 until this moment. There is no longer an account called merchandise inventory. In its place are these 3 accounts: raw materials, work in process, and finished goods. Each of these 3 Mondays, today and the next 2 that we're together, I'm going to use this diagram to get the chapter going. The faster you buy into this and allow this to be your foundation and see the relationship and the things that are alike about the chapters, the better off you're going to be. This is what I call the flow of costs through the accounts. It's intentionally to help you make the journal entries, but to help you see the big picture of what else is going on. So let's establish what we just established. We just established there are 3 new inventory accounts. They are raw materials, work in process, finished goods. Exact names of the accounts. And because we're using perpetual inventory procedures, we also have a cost of goods sold account. Now the name of this account that's unnamed at the moment is factory labor. You need to write it out or call it FL. I'll name this one in a moment. Factory labor reminds me of income summary and some others like it. It's an accumulation distribution kind of account. Its purpose is to gather up some information and allocate it someplace else. It doesn't go on a financial statement. All of its contents are allocated before the financial statements are prepared. Factory labor. We'll use it in a few minutes. So, 3 stages of production, 3 inventory accounts paralleling them, 3 elements of cost. How about 3 new volunteers? Let's go. Name me an element of cost. I need a handout.
Direct materials.
Direct materials is the correct answer. Name me an element of cost.
Direct labor.
Direct labor. Name me an element of cost. Somebody that hadn't. Here he is.
Manufacturing overhead.
Manufacturing overhead. It takes 3 elements of cost to produce a product. I don't literally want you to, but would you, in your imagination, put your pencils down for just a second? You don't have to really put them down. You can keep writing so you don't fall behind. But could you think about what I just said and the impact of it? This is not all about accounting, folks. This is just about life. and is common sense enough that you could relate to this. Pick up something in your imagination. A notebook, a computer, a car, a gallon of milk, whatever it is. What did it take to produce it? It took direct materials, it took direct labor, it took manufacturing overhead. It took some raw materials that went into that product. It took somebody to do it. And it took a place for us to work in. It's three elements of cost. And when we've combined those, when we've accounted for all of those, it should be no surprise that we produce a product. These are the elements of cost. And you're going to hear them said a lot over the next 3 chapters and even beyond that. There are 3 stages of production, 3 inventory accounts, 3 elements of cost, and 3 parts of manufacturing overhead. May I have 3 new volunteers to name them for me? The 3 parts are
Indirect material.
indirect materials. New volunteer, let's go faster. Tucker?
Indirect labor.
Indirect labor. And everybody said?
Others.
Other. A big catch-all. Indirect materials distinguished from direct materials. Let's use that accounting textbook. May I borrow that? I knew when I handed it back to you I was going to want it back. I shouldn't have ever given it back to you. I should have brought my own.
It's okay.
Right? Say some direct materials in this book. Fast. Obvious. Come on, say them. Paper. Ink. Glue. Binding. Cardboard. Yes? Direct materials. Doesn't take a whole lot of imagination to think that this book didn't produce itself. Would you agree with that? I bet there's a person involved here that put the paper in the printing press, that put the ink in the printing press, that flipped the switch, that went around to the other side where the paper's coming out to check to see if it's doing all right. I bet there's a person doing this, don't you? Mm-hmm. And I bet they're doing it in a reasonably nice place, in a factory overhead. Oh, sorry. How about indirect materials? My favorite slide in the virtual tour, attempting to get you to see indirect materials. Describe it for me, somebody.
Maybe the gloss, accuracy gloss on the book.
I'm thinking it's the teammate whose body we saw from the legs down. What was right beside him? A bucket and a mop. And he's an important team member too. What's in the mop bucket besides water? Soap. So is there soap in this book?
No.
But is there the cost of soap in this book? Yeah. Yeah, precisely. That's the point. Direct materials we can measure and see here and account for. It's the indirect stuff that's a little more difficult, and that's part of the answer to that curiosity I encouraged you to have at the beginning of today about why does manufacturing overhead work differently? Well, it is different. There's a whole lot of things different about it. It's hard to account for all the costs that go into the product. The soap in the mop bucket helped produce it. The guy pushing the mop differentiated from the guy putting the paper in the printing press and the ink and flipping the switch. That's direct materials versus indirect materials. Do you have that distinction in your mind? Yes or no? If they're working directly in the line of production, helping to produce the good. If they're helping in some further distant, away from the assembly line capacity, that's indirect labor. Indirect materials, indirect labor. And then other is this huge catch-all of the space, either rent expense or depreciation expense if you own the building, the property taxes, the electricity, the heating, the lighting, the telephone cost of the factory. We are so focused on cost these 3 weeks that sometimes students reach the incorrect conclusion we don't have expenses anymore. And that's not true. The sales staff, the commissions they get, the depreciation on their cars, the president's salary, his assistant's salary, his staff, her. Are y'all with me here?
Yes.
Those are still expenses, but that's the same that we've been accounting for already, and that's not new and different, and we're focusing on what's new and different. we still have expenses. But if it has to do with producing the product, we want to be able to associate those costs with the product that we're producing and determine the total amount we spent. Now, how about some adjectives to describe the amounts that we use to record these things? When we record direct materials, it's the actual cost that we incur. It's the invoice, it's the check that you write, it's what you really truly spent. And the factory labor costs that we accumulate in factory labor and eventually allocate to the working stage are actual cost. And when we debit manufacturing overhead for indirect materials, indirect labor, and other costs, they're the actual cost we incur. And you're sitting there thinking, duh, what's the point? Well, all that's for this. The amount that we use to transfer from manufacturing overhead to work in process is an estimate. Sometimes people call it assigned. My favorite word to use to describe that is applied. I wanted you to know it was different. It's an estimate. Now, I kind of set you up from the beginning of the hour today, and I've mentioned it one other time. I'm trying to appeal to your curiosity. Why do we treat manufacturing overhead differently than the others? Because it is different. It's hard to do. We're going to debit it for actual cost and credit it for applied cost. And factory labor is a little like income summary, and manufacturing overhead is a little like factory labor and income summary. The difference is income summary gets fully allocated and factory labor gets fully allocated. And they aren't on financial statements all by themselves, but manufacturing overhead will probably have a balance on a monthly basis and at the end of the year. And part of what you need to discover this week is what to do. What do you do with the balance of manufacturing overhead monthly? And what do you do with it annually? I'd like to tell a story. It's not much of a story, don't get your hopes up. To describe what's happening in this company of ours that produces a product. And describe for you the flow of costs through the accounts, from which I hope you can make journal entries easier. To describe the expectations to you. I think the goods you want are in somebody else's warehouse. So we prepare a purchase requisition and a purchase order, and we get the goods and debit raw materials and credit accounts payable. Did you hear me?
Yes.
Not every account in the general ledger is on the screen. I got a credit to accounts payable and no T account to put it in. Can y'all live with that?
Yes.
I'm just describing to you the ones that are relevant to the situation we're trying to describe. Debit raw materials, credit accounts payable. Now, the supervisor in the factory is ready to roll their sleeve up and put the workers to work. Get your gloves on. And the supervisor in the factory requisitions some materials. All the materials leave the materials storeroom. They go 2 places. Some of them go directly into the product. Paper and ink. Some of them help. Soap in a mop bucket. If you're with me right this minute, say yes.
Yes.
All the materials left the material storeroom. They went 2 places. Now, employees clock in, clock out, and we pay them. We're going to debit factory labor and credit cash. I use those people standing on the debit side of that account to depict they're our workers and we've paid them. But we also kept up with what they did in the factory and how many hours they worked on various jobs so that we can allocate their costs to production. If they work directly in the job, we're going to debit work in process. If they helped in the factory in some other capacity, we're going to debit manufacturing overhead. And then we incur costs for property taxes and insurance and all those other kinds of things. This is really